the Iron Trader. It is Friday morning, TGIF. Now, it's been a really, really good trading week, and good news, the port strike is kind of solved here. That everybody's going to go back to work, and then they're going to renegotiate till January 15th. So that should be very, very good here for the economy. Nothing's going to slow up. The inflation will be coming on down, be able to get the goods. That's really, really good news here. Okay, so as usual, we are going to take a look here at crude oil and natural gas. This video is for information purposes only, not a recommendation to buy, selling stock, commodity, ETF. Please like, subscribe. Thanks for watching. Okay, here we have crude oil, your daily chart and your weekly chart here. Now, this is another problem that has to be solved here. We've got a big brouhaha going on there in the Middle East, okay? So between Iran and Israel. Now, the key is going to be if Israel or they attack these oil fields or any kind of a supply issues will take crude up much, much higher. If there's anything on that order, it could jump all the way up $10 very, very easily. Now, when we look at this chart here, okay, you can see here how this was the day that they had the war started up again, and then this is that war premium that's going on here. So you got to be very, very careful. If somehow they can get that resolved, or even a ceasefire kind of situation, crude oil will come off here. Okay, this is the seasonality at play. The thing about it is the world is really well supplied with oil. The key is a disruption kind of a situation. Okay, so that's what they're looking at for a longer term. Now, when you look at this chart, you say, oh, it just is running right on up here. Yes, but this still, bottom line, is in a downtrend situation. So when you look at this double top here and you see these these lower highs going on here, you can go all the way up here to this 100-day very easily, and maybe even the 200-day, and you're still going to be in a downtrend situation here. Okay, but once you start cracking above that 100-day and that 200-day, well, then we can just start retesting all these levels up here. So right now, just be just a little bit cautious here, just trade it. Now, I'm long the UCO. I've been long here from this area right here. Okay, and then I also traded daily because, we got that situation going. However, just be very, very cautious here. If something, how this does get settled or some on that order, crude could come off very, very quickly, and it could be a really good short. Now, also, is a lot of times it's like a buy the rumor, sell the news situation. So, say all of a sudden there's an attack or something, and oil situation, and it zooms right on up here, that would probably be a good shorting opportunity to come down. So, always look at a two-way trade here, because it's just not in the favor here, or this is all just a war premium. So you have all the way down here, you have from that 66.33 low all the way up here. So you're going to have almost like a $8 to $10 here war premium if it gets up to that 100-day simple moving average. Okay, so let's just look at the upside. Well, today's high here, we had that 74.91 level. So if you're looking right in this area right here, okay, so you're looking at that 75, that's what you're looking at. But realistically, your next level here is going to be right there. It's going to be that 75.95, and then we're going to look at that 100-day at 76.18, and we're going to look at that 77.30. That's your 200 SMA here, okay? So these are going to be upside targets here. But again, it's going to be very, very hard to tell because, again, if there is a situation where you have a disruption or a attack on some kind of an oil field or any kind of disruption, this could pop right up here very, very quickly, very, very easily, okay? So just remember that. Now, on the downside here, you want to watch yesterday's high. That's at 74.09, and then right here, the 50-day is going to be key at 72.87, and then we can come over to the top of this candle. You got 72.49. We have 71.94, and then you're going to be looking here for this 8 SMA at 70.57, and at 21 there at 69.95. That's going to be your key support. But you can see here how now the 8 days curling up, the 21 days curling up here. But just remember, this is a war situation. This is not your regular supply and demand issue, okay? So again, just watch this upside here. We'll be looking for that target, that 76.18 and that 77.30. Now, as far as the RSI, plenty of room to run. Your green over your red. This is obviously very, very bullish chart. That's why I say I'm long until, the trade, I should say, is long, okay, until it's not. Okay, that's how you have to look at it, okay? So when you look on the weekly chart here, you can see this big engulfing green candle here. It just went boom right on up here. But there's a lot of resistance levels up here. So you got that 76.12, you got that 77.09, and then we have that 78.96 here. So realistically, all right in this area here is going to be very, very huge resistance. However, it's kind of meaningless when you have a situation like this. And this isn't like normal times where, okay, we have a supply demand issue and we're going to be working on. This is all a war situation. So this could spike real high. I mean, this could spike up to $100 sometimes, you know what I'm saying? But then again, that would be a really good shorting opportunity to take it back down here. So always just watch that. This is opportunity is knocking for you. But right now the trade is long until it isn't. Okay, let's take a look here now at natural gas. Okay, here we have natural gas, your daily chart and your weekly chart. Now you can see here, we just got like a sideways action going on here, okay? So we have that price channel sitting at 3, okay? So that is going to be your key to your upside. You break out of that 3 level right there, that price channel, and then what you're going to do is you can be going right there is your 3 level. You're going to go right there, okay? Very simply, it's that 309, 313, 315. That is your upside targets, okay? Very simple. Now, what we have here is we just have sideways action. So what we want to do is we want to watch, obviously, is we want to watch the top of this candle here now. Okay, you're looking at 2.94 level, and then we'll come here to yesterday's low. You're looking at 2.9, and then realistically, this 2.87 is 8-day. That's going to be very key. And then we just wiggle it all the way on down here. You got 2.82, and then I say if that 8-day is lost, this is what you're looking for, 2.72. There's your gap. And then we looked at the top of this candle here at 2.65. There's your fill, okay? Your gap and your fill. But right now, this is a very bullish chart. So you can see here. See this how nice? We had this double bottom situation. Then we had that contract roll gapped up all the way on up here. And another contract roll here. And we're gapping. We're going, okay? But again, now we're up here like a nosebleed situation. But then again, this is the relative strength index. This is very good to use. Now you can just see how strong this commodity is going here, okay? Now your green is over your red. That's obviously very bullish. But as long as this price is closed above this 8 SMA here, this is very bullish. Now it can come down below it like it did here, but as long as you close above it, very bullish chart here on the old natural gas, okay? So now say it just keeps on rallying up here and you crack that 3.159 level. Well, then what we do is we just look always on the weekly chart. Here it is. Okay, so here's that 3.159 level. Okay, so your next area, you just bring that price channel right across. And what do we get here? Your next target is 3.39. That's your next big target. Okay, and then we keep on rallying up here. Well, we just keep on following the price channel across 3.64. Okay, and then what we do is right here 3.85. That's your 200-day. That is your target. Okay, now again, obviously, if it breaks above that, we just follow the candles all the way and up here because look at that big retest all the way up. Now, I'm not saying that's where it's going to go, but I'd like to always show you the possibilities. But what we do here is just take one level at a time. Right now, today, what you're watching is that 3 level. Okay, if you crack above it, then we go 309, 313, 315. You crack above that, then here's your big target right there at 339. Your next target right there, 64, and then your big target up here is that 200 simple day moving average. Okay, but again, you got to crack that 3. Downside, just watch this 8-day. This is the key. You just got to trade this range. I know sometimes it gets a little bit boring sometimes as the range tightens up. You know, it doesn't have that movement like you do when you just start from the beginning here. But that's what we have here. You just got to trade that range. That's all we have. So watch that 8-day on the downside. Okay, that 2.87. Very key, and then watch that upside at that 3 flat. Okay, I'll be back here midday trading, and we'll take a look and see what's going on with crude oil and natural gas, and then I'll just throw something else in the old mix. Now remember, the rig count will be out there at 1 p.m. It's not what you call a market mover, but we got to see how it all shakes out. But really pay attention to the news and what's going on in the Middle East here. Any kind of a bombing or any kind of disruption here in that oil market will send crude oil much higher, and you could have a $10 spike very easily. But remember, okay, a lot of times when things spike up, that's a good shorting opportunity. So look at crude oil right now as a 2-rate trade. Right now, it's a long trade until it isn't. All right, trade what's in front of you, not what you want.